Good evening, traders. Mark here from the Day Trading Room. It's a Sunday evening, about 9 p.m. London time, and reviewing the week's trades. I'm going to discuss really one day in particular. I know this is a little bit of different theme from last week. Last week I talked about when to walk away when your emotional thermometer is flickering in that warning zone. I talked about missing trades and the fact that when you make mistakes, not compounding them, and how to deal with that. So, but this week, much better week. Some great day trading days in terms of scalping. The sell-off we had on Thursday, right up my street in terms of opportunities and tape reading and ticks and levels. It was great, and I'm going to run through that very quickly. But I really want to talk about Friday. Friday for me was one trade group or sequence, if you like. It was planned beforehand. It was based on the prior day's action, overnight action, gap position, and I had targets in sight. So I'm going to talk a little bit more in depth about that one particular trade, and hopefully it's going to give you a bit of insight into what my thought process was behind it. And I called it a day at the end of that in terms of trading. I sat around and watched, but flicked off the execution software. But very quickly, just want to talk about Thursday. Thursday is really good in terms for day trading and day trading setups. Scalping, tape reading, that sort of thing. Really, when you've got this marked down and you get a failed push up, the ticks again, guys. The ticks are telling you all you need to know a lot of the time. Now, I'm not saying the Holy Grail. Nothing is the Holy Grail, but they are giving you very good indications as to the sentiment and as to who's in charge, and just to tell you where that supply demand imbalance actually is. So we tried to push up here. The ticks just really couldn't even get above 500 here. So it's telling you what you need to know. Now you're looking, however you trigger your short entry, whatever makes you pull the trigger to get short, you need to be looking for it once you see the confirmation, if you need it, that the market is being controlled by sellers at that time, or the sellers are more aggressive than the buyers, should I say. So for me, it's tick pullbacks. A lot of loitering here, confirmation that the ticks aren't pulling higher, pulling back. This sort of thing here. Nice low tick readings into the thousands, several thousands, pull back to zero. There's your trade. At the moment, because the volume's a little bit lower than we had over the summer period, you might have to wait a few minutes. You stick your stop in, you wait, it rolls over, you take your scales, and obviously minus 1,000 ticks, nice place to come out again, while you're still being shown a short side control, sell side control, still looking for the shorts. So any pullback to key levels, obviously this is a key level here, excuse my drawing, plus confluence of the VWAP, plus highest tick reading of the day. It's a little bit of mini exhaustion. Granted, there's not much meat in that trade, 20-25 points or so, ticks or so, but it's one of those higher probability setups that they're nice to have, and to wait to come into play. Other setups, this is great. We just sucked in loads of buyers. We pushed up onto the VWAP there, and the sellers just said, "Thanks very much. This is great today above the VWAP." They couldn't have asked for more. It held for a while, couldn't push up, and then it just very strange action. But nice price action. Two big red candles to the downside. I'm always going to be shorting the first pullback on those. Always. Especially when I see this with the ticks. I'm going to drawing pen out. Firm ticks, right? You don't want to touch it. When you see that surprise action to the downside, 2 minutes takes out 15 minutes worth of effort, especially when you're taking out little miniature levels like that. The probability is that you're likely going to get one more shove. You don't know whether that's going to be 10 ticks, 20 ticks, 50 ticks, 100 ticks. It may even do one shove and then reverse. You've got to be on your toes. Of course, risk management's the key, but at the same time, catching people out, anyone caught out, is a great trade to do. Is a great trade to try and get on if you can get a low risk entry. And for me, it's just the pullback. Waiting for the pullback there. and then just shorting it and just scaling out as we go into new lows. But one thing to point out, throughout the day I'd always had in mind the 12,000 cash level to be tagged, and we did tag it late in the day, so it was nice just to hold a few after that panic, just as a nice little cherry on top from what was a nice day. But that's not really the day I wanted to talk about in depth. Those are just some trade ideas. So if we get any other similar type of days, keep eye out for those sort of things. I want to talk about Friday. Okay, now Friday, let's just go for the 60 minute here. Let's bring the 60 up. So we've got the 60 minute. We know that the buyers, the bulls, are in charge. There's a bit of a, regardless of what you think about what's happening in Europe, regardless of what you think what's happening in the Middle East, Russia, any other country, any other political information, news, price action is showing you that at the moment of December, from the end of November to December, we've had the price action has been bullish. You just have to eyeball a chart to see that. We put in a low in November, we didn't revisit, and then we got that news there. I've lost track of the news that keeps coming out there now, but we got that news which spiked us up in the European session. Then we continued in the US session, consolidated, which, by the way, after a monster trend day, most of you probably know this, fading extremes, if it's a nice low volume day after a trend day, fading extremes, especially if they're probing down into the action of the prior day, so if it's an uptrend day probing downwards, fading those sort of extremes is, they're nice little setups. But anyway, the point is, buyers are in control. Buyers have been in control. Price action's strong. Price action's bullish. The 60 minutes telling you that, okay, we've been in a little bit of a range since December, but we've drifted to the upside. We've made higher highs. We haven't made lower lows. It's not a monster trend, but generally we're sort of getting this, sell off in the European session, and then lift up in the US session. We had that other way round in early part of the month, but anyway. So after that sell off on Thursday, we got a sell off on Thursday where we took out some lows, and we took that 12,000 cash out. But this is where it gets interesting for me. Now, the low are right down here. This is the 24-hour YM, by the way, so all night, all day, so including the European. And actually, I find at the moment, and other traders I'm speaking to are finding this, that it's more prudent to use this a little bit more for decision making, because there's so much European news coming out, and because a lot more volume is being done in the overnight European session. That highs and swing lows tend to be taken into account news that's come, so it's sort of the level that's accepted based on the news, if that makes sense. So I'm looking at 24-hour a little bit more now. Anyway, the low here 11.891, a low here 11.894. Let's just see what the low was here. 11.890. Now, make of that what you will, but the point is, we're all getting information ready for the next trading day. We talked about that day. It was a good day for day trading, good day for scalping, some setups. However, what am I doing the next day? How am I positioning myself? What am I looking for the next day? Now, the important thing to do is to look at the overnight session. So let's look at the overnight session. Okay, that was Friday's there. So obviously there's the low close, and I'm always drawing in my overnight highs and lows. So this is the open. It's 2:30 for me, London time, which is around there, about there probably. I'll have a look. I'll double check in a second. I've got the drawing pen. But anyway, okay. So there's the close from the down day on Thursday. We took out that 12,000 cash level, and we held and we popped back up. Now we failed to take out that low overnight. We drifted higher, drifted lower, drifted higher, drifted lower. Now before 8 o'clock, it's Asian time only, so 8 until sort of 2:30, well, maybe a little bit earlier, probably 8 to 1 European influence, and then sort of 1 o'clock London time until the Dow open. We've got the US influence coming in, and then obviously when the Dow's open, that's the primary influence. But the point is, there was no continued weakness. The weakness did not continue. We didn't take out those lows. We held. In actual fact, we started to open with a little bit of a gap up. We'd actually probed relatively high. We probed relatively high, quite deep into the prior day's downtrend. So that to me is quite a bullish overnight information. We've got a pretty large range there. It's about 170 point range. and the buyers had stepped in at that point. So I like that. I look at that and I say, okay, yesterday was quite a bearish day. We didn't get any follow through overnight. Okay, I've looked at the 60-minute. We can confirm that there's, we still know that we've got a little bit of bullish sentiment there. Regardless of what the news is coming out, we seem to be holding at those highs. Obviously, this is all can change, and we're just looking at price action. We're just looking at the information we've got at that current time. We've got a sloping up VWAP, indicating that generally price is being accepted at a higher level. And we've got the low here, and we've got the high here, and we've got a little, almost a 50% pullback, a little bit deeper, I think, just by eyeballing it. I haven't got the tool to put on, but just by eyeballing it, it looks a little bit around a 50% pullback, and we've held, and this is where we're opening. So we're deducing now that there's a little bit of strength here, and we're also thinking that, okay, if people are going to choose this as a buying opportunity, then we've got some good targets to the upside. So let's flick back to the actual day when we opened. So I'm starting to think, okay, we've got a gap up, and we, the overnight range we're putting in the bullish category, and we're also putting the 60 in the bullish. We're putting yesterday obviously in the bearish, but it's what happens to price in response to that matters. So overnight we're seeing bullish, as I just said. I want to see what happens at the open now. The gap isn't huge, it's a 30-point gap or so, but the interesting thing for me was this: the fact that we opened here and we pretty much drove straight away. We drove from 72 in the first 2 minutes up to 96, just straight away. No pullbacks, nothing. Ticks are firm. Okay, so from a scalp trade point of view, I'm always buying that little pullback. Nice firm ticks, good opening drive, 3 solid candles, first red, little pullback, little tiny pause. That's really more of a tape read rather than a specific setup looking for something to come back. A little flag on the ticks helping, and then just buying that and then just scalping it out as we drive up. But in this case, my hypothesis for this was, if buyers are going to step in and if everything's pushing into line, then I'm looking to get on an upside trade, and my ultimate target is the overnight high, because if you've done your homework on the Dow, the S&P, you're going to know that the overnight highs and lows are tagged the majority of the time. One or the other is tagged the majority of the time during the daily session. So if you can get on the right side of a move, then it makes sense, if you're on the right side, to hold some of the position at least for that overnight high or low. If the market is open and allowing that, sometimes it opens up very near it and the trade's gone within the first few minutes, but sometimes it doesn't. Sometimes things line up very nicely. So I've got that bullish sentiment, I've got my hypothesis, and all I need now to double check it is that the open is strong. And I know the open is strong because I've decided to take a little quick long on that, and we haven't revisited. The ticks are firm. All I need now is a trigger to get long. Now, of course, I could be wrong. That's what stops are for. I'll take a stop, I'll come out of it, I'll reassess. But things are falling into line. Yesterday's shakeout, overnight session being bullish, couldn't take out the low, opening near the high, pro quite high, pulled back, held, rising VWAP, and now finally we've got the strong open. So one of my favourite setups, ticks pulling back to zero. I've seen the opening drive is strong as well. It's the final thing I need. Now I'm waiting for some sort of trigger. I actually held a little bit of my position from that first buy, not a lot, because it was just a first little trade, little tester. Let's just see what's going on. Then I'm happy, everything's lining up for me. I've got a good reason to take this now with some good size. So as I pull back to fix to zero, I'm in. There's this position, I'm taking it, I'm building myself up to full size, taking into account what I've already got from the earlier trade. So I take that position and I sit with it. I have my stop in place and I wait. And my final target is the overnight high. And what about my scales? Well, my scales are going to be, of course, that previous high there. And a probe if we break out. Normally, if we break and we break cleanly, I'll hold it. But sometimes we break and start to slow down. I'm looking at the tape on that one, so I'll always take a few more off there. New high in ticks, always, or 1,000 ticks, always taking some off. And then final targets. If I've got any left, sometimes it may happen that I don't. If I get 1,000 ticks and I get this and I get that and I get sort of an exhaustion type setup, I may have none left. But in this case, I didn't. I held a nice chunk and to that 63, which was the overnight high. So just running through the scales again, so running through the entry criteria: strong, overnight session, 60-minute, previous day, all that, discussed that. Ticks pulling back to zero, there's my trigger, there's my entry, bang, I'm in. I'm taking some out of that high just in case, I just want to take a little bit of risk off the table. Again here, maybe got a little bit spooked out by that candle, but the fact that it broke up and pulled back, I just skimmed off a few more. Why not? I may as well. I've got there's no reason not to. Got a nice high tick reading there, so a few more off there. And then, you got to be prepared to sit through a little bit of pullback. Come on. I think the market never shoots up in one direction, very quickly. So you're sitting through a little bit of rubbish here, but still absolutely fine with it. Especially again, ticks, they're just holding there. I've got no reason to be concerned. Well, why should I be concerned at that? And then we got a nice little push up. Okay, it wasn't that aggressive, but the ticks were nice and solid. And then there we go, boof, 63, I think it was 64, the overnight high, all done. A lovely little trade, and just one of those trades that just sits nicely, planned beforehand. You've got an idea of what you're gonna what you're gonna see to take it. Everything's starting to fall in line. You need to see a few more little things at the open, perhaps. You've got targets for it. Those are the trades that really start to push you ahead because you've got that extended target, because everything's lining up. You have the confidence to hold the trade for the final target. You've got the confidence to sit with that trade. You're not snatching at a few ticks. You're not snatching at just taking 10 off. You're not snatching. You're saying to yourself, listen, everything's fallen into place for me here. So far, I'm right about it. I've got a great entry. I've been patient. I've waited. I've not chased. And I've got targets, and I've even got statistics to back it up, to say that it's going to hit that overnight high, because looking at the statistics, I can see X% of the time that's what happens. So why take it off the table? Odds are on my side. Everything is on my side. Is there a reason to close? No, there isn't. Trade it by the plan. Trade your plan, and these are the times then you're putting in good profits into the account, and they make up for the times where you have to walk away, the times we have to sit aside, the little stop outs, all those sort of things. Trades like this that fall into place, really do well. So I guess what I'm sort of saying is, this is just covering my trade, my setup. But if you're watching this, whatever level of trader you're at, beginner, experienced, whatever you're trading, the market you're trading, it pays sometimes to have a few trades that just really are sort of golden eggs, if you like, really are trades that, yes, you could get stopped out. And yes, if you've seen my videos, watched any of my previous videos, you're going to see somewhere I've thought, yeah, this is a great trade, and I've taken a stop on it. That's what risk management's all about. You never go into a trade without assessing the risk. But at the same time, when the trade's working for you, let it work, let it pay you. You've been patient, you've analysed it correctly, you're being proved correct, and hold it for as long as you can, for as long as your trading plan dictates that you should. So that's it really, guys. I just wanted to talk about that specific trade, my thought process behind it, how I came about it, what the trigger was, and a little briefly about the prior day. So as always, risk management number one. It really is number one. Of course, this could have just reversed fully, filled the gap, taken out lows. You just do not know. News come out, especially at the moment. You've got to have, I would recommend people having a hard stop in, even if you have a hard stop that's quite a way away and you're manually coming out, whatever your risk management dictates, have some sort of hard stop in the market, because there's every so often some news just coming out. You just don't know what's coming out of Europe at the moment. You just don't know. So, and it's very spiky. Even if it doesn't continue, you really want to be, if something comes out that's changing the face, changing the price action, get out your trade, reassess it. Let's have a look, see what's going on, look at my levels, reassess, and then trade it from there. So anyway, good trading, guys. I hope you enjoyed the weekend, and I'm looking forward to a good week next week. Wish you luck in the trading week next week. Take care. Back with another video shortly.